Good day, traders, and welcome to BCR's Daily Market Insights. Today, we'll be looking at the dollar index, DXY, crude oil, spot gold, and the Aussie dollar. So let's dive right in. Let's start with the US dollar index, which is on track to fall nearly 1% this week, reflecting a softer than expected December CPI and PPI data. The index briefly dipped below 109 and is searching for support amid declining treasury yields. The 10-year benchmark yield has fallen from its recent 14-month high to around 4.8%, adding to the dollar's bearish momentum. Traders are also cautious about potential volatility stemming from tariff-related comments by President-elect Donald Trump. Technically, while the broader uptrend remains intact, short-term corrections could be in play. Key support levels at 108.63 and 108, while resistance lies around 109.75 and 110. Next up, we've got WTI crude oil, which opened at a 7-month high of 79.37, supported by US sanctions on Russian oil exports, which may tighten global supply. However, expectations of US oil demand and rising domestic production could limit the upward momentum. A US government report forecasts domestic production to rise to 13.5 million barrels per day in 2025, which is up from earlier estimates. From a technical standpoint, WTI has maintained its bullish outlook after breaking above the 10-day moving average. Upside resistance levels include $80 and 82.18, while support is found near the 77.80 and 75.54 mark. Next up, let's have a look at spot gold. Gold prices are rising for the second day in a row, approaching the $2,700 mark as the dollar weakens. Risk on sentiment has reduced the demand for safe haven assets, but geopolitical risks and a weaker dollar provide underlying support for the metal. On the technical front, gold has gained positive momentum with dip buying opportunities emerging around the 2662 to 2660 mark. Resistance is seen at 2698 and 2700, with a potential breakout targeting the 2726 mark. Lastly, let's have a look at the Aussie dollar. The Australian dollar continues its recovery, trading above 62 cents amid improving risk sentiment and strong Chinese trade data. Rising commodity prices and Beijing's stabilization efforts for the yuan have further boosted the Australian dollar. Technically, AUD/USD is trading above its 20-day SMA at 62.14, with resistance at 62.65 and the psychological level of 63 cents. Support levels would include 61.62 and the 61 cent mark. Today's market action reflects a mix of inflation-driven sentiment and geopolitical developments and commodity price dynamics. With the dollar under pressure, gold and WTI crude oil are seeing renewed interest, while the Aussie dollar benefits from favorable risk sentiment. Stay informed, manage your risk effectively, and happy trading.